All right, Mr. Lennox, you are free to start.
Thank you, Cynthia. Good morning. I call to order the Town of Hilton Head Island Finance and Administrative Committee of Tuesday, August 18th, 2020. Cynthia, have we complied with the Freedom of Information Act?
Yes, sir, we have.
Committee members, please reply with present or here when called upon. Cynthia, please call the roll.
Mr. Harkins,
Here.
Ms. Becker,
Here.
Mr. Lennox.
Here.
Thank you, Mr. Chairman.
Cynthia, does staff have any changes to the agenda?
No, Mr. Chairman, staff does not have any changes at this time.
Committee members, may I have a motion to approve the agenda?
So moved.
Second.
Committee members, if you have any changes to the agenda, please state them when called upon by Cynthia. Otherwise, please vote yes or no to approve the agenda as presented. Cynthia, please call the roll.
Mr. Harkins,
Yes.
Ms. Becker,
Yes.
Mr. Lennox.
Yes.
Thank you, Mr. Chairman.
We have no minutes to approve. Cynthia, citizen comments.
Mr. Chairman, public comments concerning today's agenda items were to be submitted electronically via the town's open town hall portal. The public comment period closed yesterday at noon. At the conclusion of the open town hall, there were no public comment, and nor did any citizen sign up to speak at today's meeting.
Thank you, Cynthia. We have no unfinished business. We have two agenda items under new business. John Troyer, our Director of Finance, will review and open a discussion of the June 30th fiscal year 2020 preliminary results. John.
Thank you, Mr. Chairman. You'll see a format that I hope is familiar. I tried to be consistent so that you would have a similar look to this information. We have a good news to report for June 30th, so I'm happy to present today. Just a quick look, a pie chart of our budget. You can see the pieces from debt service, general fund, stormwater, and CIP.
John, let me interrupt you if I may. Are we supposed to be seeing something on the screen?
Thank you, Mr. Chairman. Let me make sure I am sharing the screen. Can you hear me okay?
Yes.
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 Okay, here's our title page. The next look is a pie chart of our budget. This is last year's budget, and you can see the components, the bigger components of it, general fund being the largest piece. Year-to-date collections, we didn't meet last year, but we were still 98%, so we had $1 million compared to 81.6 last year, at 98.1% of last year's collections. If you would have considered this back when we were shut down in March and April, this would have been really, really optimistic, and we're super thankful that the collections came in as well as they did. Property taxes, you can see the next page. Across the board, we had positive results, above budget. Property taxes to prior year, 2.6% above. Now we did have a CPI adjustment last year, and so that of 1.4%. And so our growth in our tax roll, or collected tax roll, was 1.2%, the 2.6 minus the 1.4. And so that's a positive in a recession that we're growing over last year. And this is our biggest revenue item. Property taxes, you can see on the pie chart, 36% of our total. And so this is our biggest piece, and this is our major starting point for our budget. Business license income, we've been through this. It's really back end loaded, very seasonal, and so we're always nervous at the end of the year. How is this last month going to look? Because it's so important to the total. If you look at our, we split business licenses between a state portion, which is collected by MASC on our behalf, and the local portion, which is collected here. The local portion, we've worked hard to communicate with our local businesses. Town council was generous to move the deadline back so that they would have better opportunity to make their business license payments, and those communications and actions reap the benefits, and you can see our local business license income was above budget by $192,000. It's tremendous. We're super thankful that we did as well as we could here. On the state side, there was a change in their payment structure, their payment timing, and so they had some changes there, which is the majority of the reason for the decrease from last year. We're expecting a final payment, which normally would have been in our window, to accrue back to June 30th, and with the change in the state's or the MASC's timing, it takes it out of the window. Last year was about $929,000, and so that would make up a vast majority of this shortfall from last year. But you can see local, I think that's a really good indicator. Local, we're above budget, and contrast that with the state. Even with that extra late payment, they're below. And so I think that's a good indicator for our local economy in comparison with the whole state.
John?
Yes, sir.
John, will you take questions during the presentation, or would you prefer to take them at the conclusion?
I would prefer to take them as we go.
I'd like to reinforce what you said about the local economy as it pertains to business license revenue. There are two components that I'm concerned about. The first is the component of local businesses moving off the island. And although we know there has been some, this local collection of the business license fee would indicate that the local economy remains strong. Enforcing that in another direction would be the closures of some of the local businesses. You know, we are aware of a number of restaurants closing permanently. But again, the amount of business license revenue collected this year, at least through June, would seem to indicate that the trend seems to be favorable.
Yes, sir. And these are collections through June 30th. Some of these payments were made for June 30th in July that we counted as June. And so to be able to look at the window and really Memorial Day is when a number of things open back up, and you can see a higher level of activity in June, much higher in June than what was in April and May.
John, I have a quick question.
Yes, ma'am.
Is any of this attributable to new business license, new business coming onto the island?
Yes, there is. And so,
I'm listening.
So yes, there's a normal, and we call it churn. Some close, some open, but we're seeing both of those happening this year in these numbers.
Tammy, the biggest one I can think of is the Courtyard by Marriott on Pope Avenue. As you recall, that opened in the early stages of the pandemic.
Right. That's good news. Some leave, some come back on. I'm encouraged by that and like to see more of that happening, and work towards getting our businesses and our buildings filled again.
Yeah.
John, going forward, are you baking in the unfortunate news about Steinmark, and then preceding them, Carrabba's, and maybe a couple of others?
Yes, and that's a part of what will be continuing considerations. We certainly want to keep an eye on those, and hope that some other businesses will take their place.
Mm-hmm. Thank you.
Here's just a graphical representation. You can see the gray is the actual, and the yellow is the budget. Our local is beating budget, and state, part of that was the timing of a payment, but we compare very favorably to the state. Business license is generally a function of sales, and so I think it's a good indicator of the economy.
Mm-hmm.
Stormwater, just updated numbers from what you have seen. Stormwater continues to come in strong. We beat budget, and so we're happy about that piece of the budget. It's working just like it should. Interest earnings, our interest rates dropped remarkably in May and June, and so we were hoping that we would beat last year's interest earnings, but we didn't quite make it because of the low numbers on May and June. But we're awful close, and this is a nice piece of the budget that compared favorably, 98%. When we talked about the shutdown, there was talk about really, really low numbers as a percent of prior year, and at 98%, we can say that we did as well as we could under the market conditions that we had. Special revenues, and you'll see what some of the components are. Special revenues are going to include some of the tourist specific revenues, and so these are going to be more susceptible to the closures, and you can see that we were 5.6% less than last year, or you can call that 94.4% of last year. What are those revenues? You can see, I think we can emphasize right here the diversity of our revenue streams, whether other locations, other jurisdictions can have one or two revenue streams. You can see that we've got a number of different revenue streams, and that helps us with that diversity. And especially in times like these, in order to keep that whole town operations going. And so there's a lot of different pieces to this. Here's our comparison to last year. You see that the differences, road usage fee, 2.8 less, A-tax, our accommodations tax is 5.7 less, but I think one of the things that we should talk about a little bit is the hospitality tax, and that's a tax collected on prepared food and beverages served. And so with the restaurants closing and the shutdown, H-tax was the one that was hit the most by the COVID and the shutdown, and you can really, these numbers underscore how much of an impact that was. And I think, and to answer your question, when you talk about Carrabba's or other restaurants, we certainly want to keep an eye on that and consider hospitality tax in the future, and we'll talk more about that. One of the reports that we get from our friends at the county is the real estate transfer fee, and this number has been consistently strong all year, and so our property values are and property taxes were a function of property values continuing. Real estate transfer fee, that's a function of property values holding, and there's strong activity continuing on the island, and so I think that's a real positive note for our local economy. Beach fee is based on accommodations, and so that's very tourist related, but if you were to consider, okay, these are based on accommodations and we're only off by 5% year to year, that's a big success. If you consider the mindset that was, in April and May while we were shut down, and we can celebrate that. Electric franchise fee is a function of usage, and so depending on that actually can be depending on economic activity, but also dependent upon the weather. And so how much do people run their air conditioning? How much do businesses run their air conditioning? And so we're just a little bit off. Water fee is above last year, and investment income we talked about. Spending, we're up a little bit, 2.3%, but this spending includes our Low Country Celebration Park and all our operations. And so we're modestly more than last year. Spending by category, our general fund, which is our basic town operations, are up 3.1%. Special revenue, 5.4%. Debt service, we've got a couple of dynamics going on, is that we were the beneficiaries of some refunding, and so you see some savings on the debt service side. And we had previously borrowed everything that we needed to borrow to keep the capital improvements plan going. And so as we made payments in principal, the outstanding debt is reduced. And so this past year, 2020, the only debt issuance that we had was a refunding for savings, and there was no new debt. CIP, our capital program, continues, and so 6.4%, if you consider what a big project our Low Country Celebration Park is, it's moving forward and going. Stormwater is moving. They're getting a lot of projects done, and they're seeing how much they're accomplishing.
John, of the 22 million in fiscal 2020, how much of that was Celebration Park?
I've got that on another schedule.
Good.
So let me flip to that. About $12 million, right at 12. General fund, basically, if you look at June, it counts about a month and a half, and that's, we can get a utility bill for June, then we get that in July, and so in June we do our full accruals and count that June utility bill that's paid in July as June, and so June is where we catch up. How do we compare with the months? If you look at this schedule, orange is 2019 by month, and gray is 2020. February, March, April, May, our spending was less than last year. And so you can kind of see the slowdown and shutdown, and general fund spending reflected that. And then as we opened up, then we had more spending and more activities going on, and trying to actually do a few things that were not accomplished in April and May during the shutdown. But you can see that our pattern really matches last year. General fund expenses by month. Again, orange is 2019, 2020 is gray line, and then year-to-date matches really close, 37.8 compared to 38.8 on the general fund. On the revenue side, for the general fund, June is also a really big month. There's a number of payments that happen at the very end of the year, including business licenses, state and local, and a number of others. And so beyond our January and February, which is when we get the majority of our property taxes, June is certainly important. And if you look at our January, certainly stronger than January the year before. February, certainly stronger than our year before. And so going into this shutdown, we're really in a positive position. March and April and May were all less than last year, but you would expect that in a shutdown. And June picked back up, and I think the difference that you see here in June from one year to the next is the timing difference of our state business licenses. General fund revenues, you can see they track and actually come right out and look at our general fund revenues, 40.0 million compared to the 40.1 million. We're right even with what was last year. And so if you consider we're in a global recession, we're in a pandemic, and we were shut down, and yet we basically collected as much money as we did last year in the general fund. And so that's a reason to celebrate. How do our revenues and expenditures compare in our general fund for the year? You can see that expenditures early in the year, and you know this, you're well aware of this, expenditures early in the year are ahead of the revenues, and then at the end of the year, revenues were above spending. And if you just look at the last 6 months, these are the same numbers, but just the last 6 months. The last 6 months are tracking very, very closely, and at the end, revenues were more than spending. So we had a general fund, $40 million in collections, 38.8 in spending, and so we have a contribution back to the general fund balance, and I think that's worth noting. And it's a testament of our economy, it's a testament of the diversity of our revenues, and a testament of reopening as much as possible within the pandemic. You can see there's a different mixture of revenues, and the one that really stands out is our hospitality, and so we know that our restaurant industry is hurting. Age tax collections really show that, but you can see there's a mixture of other revenues. General fund, this just shows that we spend, it takes town operations to continue before our revenues come in, and then it flips toward the end of the year. If you look at our orange is 2019, blue is 2020, at the end of the year we show a general fund surplus. Not quite what we had last year, but
John, that graph that you have showing now, that is a cumulative graph. So the maximum use of reserves occurs in December.
Yes,
and that maximum use is reduced somewhat in January and then goes to a surplus in February, and we end the June fiscal year with a surplus of just over $1 million.
Just over $1 million. And so this also answers the question, if somebody asks how much cash do you need in order to start the year, these are split by months. You need $9 million right here just for the timing differences of the revenue and expenditures. That's without taking any kind of contingency. And so it's a measure of, people might ask, well, why do you need reserves? Here's one of the good reasons why you need reserves, just to take care of the timing differences of town operations.
Mm-hmm.
Key issues in June, you've seen all this before. And just as a reminder, key issues in July, this is, and we'll share this with everybody. These are the same slide as last year. Expenditure savings, and we'll get to that here in just a little bit, but because of the concerted effort in order to not spend, to reduce, to delay, and cut spending where needed, that was a contributing factor to our ability to show a surplus at the end of the year. And so I also think that we talked about July as an important month, and so July was a good month, and we've got those numbers now. Age tax, we're going to have to continue to monitor, and our restaurant industry is struggling, and it shows there. Issues in August, and I'm already said that expenditure savings contributed to the bottom line. Revenues were impacted, but not as much feared. If you were to just remind yourselves of how things were looking in April and even in May when things were shut down, there was a fear that our revenue collections would be much less, and how would we be able to make it through June 30th? And I just have a good report to say is that, okay, our revenues continued and we're successful in almost as good as last year. And then with our savings from our budget, not everything was spent, then we're able to put back money in general fund balance. And to add a similar note, item number 6, continue to monitor and adjust where necessary. Age tax was hit the most. One of the things that we've held off on is HTAX is mostly used for capital, and so we're holding off on capital spending while we wait for HTAX to recover, just to make sure that we have a good match. State aid tax, those numbers are down, but not down as much as we thought. It will impact our tax grants. It will impact our DMO, and so we can look for that in the new year. Local aid tax is really used for our current operations. Beach fees are down, but we did have a beach fee reserve, and that helped offset that, and so we're able to continue what we needed to do with the beach fees, and the beach fees are really pointed toward the next beach renourishment. We have more information. This is kind of a natural break. I've got another section that I wanted to talk about, but I'll stop here for any kind of questions or comments.
John, could you just go share what you know about July again, please?
Because most of July is related back to June, that those numbers get reflected in there. And then what you see from an accounting standpoint, our July collections are actually going to be really low because we take our July collections and move them back into June, and then we don't do the same for August. And so our July look is really, really narrow, although we know that we have a number of new businesses that we have business licenses for. And those we are collecting, and our expectation is that one payment that was pushed back from the state is going to be collected here sometime in August, and that will be a good start to the new year, which that one from a year ago, that helps us jumpstart the fiscal year.
Thank you.
Any other questions for John at this point?
No.
I think it is appropriate to say, and I've had a lot of people ask me about the impact of the pandemic on local business and what impact that would have on town finances. And I think we see, at least through the end of June, hospitality taxes, food and beverage off 17%, beach and accommodations taxes each off 5%. And we'll have to take a wait and see over the first quarter in fiscal 21. But 17, 5, and 5 on hospitality, beach, and ATAX.
Mm-hmm.
And it really helped that we had such a strong first 8 or 9 months, and our economy was strong going into the pandemic, and that really helped offset the bad news of the pandemic.
And even with the impact of those three sources of revenue, we still finished the year at a surplus.
Yeah, and property values are going up. We're seeing and hearing really strong reports on values and real estate transactions.
Mm-hmm.
Thank you, John. Move on.
Okay, this is our normal monthly financial statement format, and so hopefully it's familiar. We did want to talk about just a little bit. Real estate transfer fee up over last year. One thing we didn't say in the other is that our building permits, 7% increase over last year. I think that's reason to celebrate. Also, that's a measure of activity and a measure of investment in the town. And so a 7% increase in a pandemic and while we had some of the shutdown is another indicator that there's some good things going on.
John, as I travel around the island, I'm seeing more new construction than we have, I think, the year before, which this reflects. Do you have any metric on what, how many or what percent of these new home building projects are the result of a tear down and new replacing it?
We don't have that, but I think that when you talk about that's something that's probably kept in community development in their permits. But we could see if we can dig into the numbers a little bit and get those.
Yeah,
But yeah, it's just positive that people are investing in the island, and I think the
right.
permit number really underscores that.
Because a tear down and then to be followed shortly thereafter by a rebuild is a real confidence builder in the economy.
Certainly is. Some of our tourist driven, you can see the red numbers. Local accommodations tax and beach, you can see they're off by 5%. Would have been much worse. And then the hospitality tax off by 17% for the year. And so those are our most tourist sensitive revenues, and they're reflecting in that. And we show our local business license strength comparison with the state. Not to make anybody dizzy here. Now, one thing I wanted to note too is that you look at our summary balances for our capital projects fund. The funding for the capital projects was in place at the start of the year, and so as we spend on these projects, the expectation is that the fund balance will decrease as the projects move forward. And so if you look and you say, well, why do we have a reduction in fund balance for capital? It's because these projects are moving forward, and we can consider that a success. And you'll see that how that comes in a little bit later. There's another format of, you've seen these numbers, a good mixture of revenues. And I'm trying not to get too small in numbers, but if you look at this is our standard income statement. Our revenues, our total revenues. And I think what I'd like to emphasize is that our first column is the general fund. There's a surplus. Second column is the special revenues, the collective of all the special revenues. Surplus. We really plan for that to be break even, but a lot of that is the timing of our capital also. Debt service. You can see that there was a small draw in fund balance, but the reality of that is that we spent some money right here on issuing bonds to refund them at a lower interest rate. That's going to save the town money over time, but in this first fiscal year, it's going to show that there was more spending than revenue, but over time it's going to be a net savings, and you'll hear about that later today. Capital projects, our fund balance reduced by $15 million. That's as our $22 million is up here, our $22 million in capital spending. It only reduced it by 15. Put all that together, our total governmental funds, and that's just accounting speak, but we classify these in governmental and business funds, business being the stormwater. Our net bottom line was a $12 million reduction in fund balances. Of that, you can attribute $15 million reduction to a planned use or draw of fund balance from our capital spending. So if you take the capital out of that, then our net for all governmental would be about a $3 million increase. And I think that's a tremendous success. And so, okay, how did we do? Well, outside of our planned use of funds for capital, we're to the good about $3 million, and to the right, our one business activity in stormwater is also to the positive by almost $500,000. And so stormwater is active and doing a lot of projects, and yet we're still contributing some toward their ability to do future projects. I'll go back just a second. Apologize for retracing. Just here at the end, you can see the general fund balance began at 21 million with a $1 million contribution. We're looking at a $22 million ending balance, and I think our bond raters are going to be really satisfied with that, and they are professional worriers, and I think we've got a good report to make. General fund budget, you can see that our revenues, 98% of budget. Early on, there was fears that it could be a lot worse, and if you throw in transfers, we're at 97% of budget for collections. And because it was that high, coupled with our spending was $3.8 million under what was allowed, and that was a very purposeful March, April, May slowdown in what we're trying to accomplish in order to make sure that we would finish strong. That gave us the ability to put back $1 million into the general fund. So after that is just the normal monthly financials, which you'll get a copy of here hopefully today or tomorrow, and these will be the same numbers, and I would open this up to any questions or comments.
Does the committee or Glenn have any questions of John regarding June 30th?
So, excellent report, John. I really appreciate your explanations and your thoroughness. Very good.
Tom,
Yes, Glenn.
I just want to echo what Bill just said. This is a very positive and heartening outcome, showing positive revenues for the most part. And so I think that the adjustments to the budget and limiting CIP expenses is working for us. And so I salute John and his people for careful management of these revenues. Thank you.
Tom, it's David Ames.
Yes, David.
I was able to join a little bit later than the beginning, and I'm glad I did. I am feeling a good deal of confidence in John's work and really appreciate the management effort in paring down the budget at an appropriate time. So I feel good about it, and thank the Finance Committee for looking over the budget.
John, I would say that the $1 million surplus in the general fund is the good news out of the pandemic as of June 30th. The concerns are, as you mentioned, hospitality tax, beach and A tax, and the jury is out on the first quarter of 2021. So although there's optimism coming out of June 30th, I think we need to be cautious going into the first quarter of fiscal 21 because we have yet to see the final impact of the pandemic. But I think you said it very well, the diverse sources of revenue that we have and then the strength of those sources of revenue served us well in fiscal 2020.
My sentiments exactly.
Well, as well as mine, and I think that that is congratulations on everyone's part for pulling together and making such a successful story to be reported today. But not to take our eye off that ball. The full story hasn't been quite written yet, and I have no doubt that it'll be a successful, happy ending. But I'm happy to be part of the team that watches over this and can have such faith and confidence in the staff and in the reporting of these numbers. Thank you.
John, I'd like to move to new business item 8B. In this economic environment, locally, regionally, and nationally, we from time to time have opportunity. And one of the things that you want to more fully discuss is the opportunity we have in bond refunding.
Yes, sir. We have, and that was part of this overall direction to look at what we can reduce, what we can delay, and what we can cut. And we have regular meetings with our bond counsel, Franny Heiser, and our financial advisor, Brent Robertson. And I'm not sure if they're on this call or not, but their input was certainly in this. This is the result of their work to be able to comb through our outstanding debt, take a look at it, and look for areas that we could save and take advantage of. We noted on the investment side that our interest earnings really fell off in May and June, and take advantage of that same marketplace and try to save some money on the debt side while the rates were down. And so that was the start of these conversations. And so I'm talking from a report that was produced by Brent Robertson in consultation with Franny Heiser and myself and town management to say, okay, what can we do in order to save money? Looked at, and here on page 3 is just basically there's a 2011A set of bonds and a 2013A bonds for a total of $12.2 million, and we thought, okay, those are the ones that really stand out as possibilities to save money.
John, can you enlarge that just a little? There we go. That's much better.
And we'll make sure that you have hard copies of these afterwards too, so you have plenty of time to go through, because there's a lot of numbers, and I'm going to talk a little bit fast, but I want you to have plenty of time to see the details of that. So part of that is that on the first one, 2011A, this would be an advance refunding, well, actually a current refunding, but refunding as of March 1st, 2021. And so we would issue bonds now with the expectation that we would pay off bonds on March 1st, which is the call date. And so the escrow requirements just calculate how much would we need in interest and principal in order to pay off those bonds at the first time that they're legally available to pay off, and that's March 1st. And here's the numbers. The next page is a similar calculation. The 2013 bonds are not callable until March 1st of 2023, and so there's a number of interest payments that need to be made, as well as the principal in 2023, and that dynamic affects your calculations later. And we move up. And I'll try to make this a little bit bigger, but you can see that our average coupon, and I'll highlight this, is that the current debt, $6.6 million on the 2011, $5.5 million on the 2013, have interest rates of 3.5 and 3.93. Average life is just under 5 years and 9 years for the 2013. Our expectation is that we can replace those with numbers that are 195 for the 2011 and 265, 267 for the 2013. And so what this proposal is to take a look at, okay, how would that look if we had a 195 and a 265 instead of 393 and 351? And you can look here, the 2011 numbers. It would have a gross savings of $300,000, and that's just there was a moment in time. You can see the July 29th date here prepared by this Brent. $300,000 gross savings. If you took the present value, savings tomorrow is not the same as savings today. A net number of $274,000. And so, okay, that's that's how the town would improve by executing this transaction. On the other hand,
John,
yes,
is that net of transaction fees?
yes, this is net of transaction fees. And conversely, we're doing the same kind of analysis because it's a little later to the call date and you go out a little bit more. The interest rates are a little bit, the interest rates are higher, not just a little bit higher, but they're significantly higher. Later on, to refund the 2013, we show a loss and it would actually cost, but a present value of a little bit less. One of the things that we had talked about with our advisors is that just the benefit of the marketplace is really fluid at the moment, and there was a sense that if there is a savings opportunity, and this was just one moment in time, that transaction would make sense and would save. And the standard rule of thumb is if it saves 3%, it's not hard and fast, but a kind of a general rule. If it saves 3%, then that's worthy of moving forward. This one, although it's not in the money now, could be on the sale date. And I just want to talk a little bit about our timeline, our proposed timeline. We would have first reading in August, second reading in September, prepare the bond documents and the legalese in October, and have a sale in November with a closing in December. And so really the key date would be in November when we would propose a sale, have it competitively sold. If those interest rates are in a place where we can capture savings, that we would take advantage of that too. And so what we're asking, and that's the proposal, is that we have a proposal to fund 2 bond issues. Right now, only one of them saves the town money, and so we would only execute one. But we think there's a possibility that by November, when we do a sale, that there might be adequate savings in order to do a transaction on the second one.
On the second.
Okay.
So it's before the election.
On the second sale. And we've got a schedule, and I don't have that right in front of me, but I'll be sure to share that. But yeah, it's basically sell in November, close in December.
So November 2nd is the date you price it.
It would be in November. I'm not sure about the second date.
Oh, okay. So it's not necessarily November 2nd. It is in November.
Yes.
So it probably would be after the election.
Probably, yes.
Okay.
And just from the bond people, do not like elections. They do not like the uncertainty of election, and they are nervous before an election, and they're less nervous after an election, no matter who wins, because you take away the uncertainty, and bond pricing is generally better after.
All right. So if it's in the money, you go, and your trigger is 3%.
Yeah, that's our standard. I mean, if we were at 2.9, we'd probably take it. 2.8, we'd probably take it, but we'd like to have 3%.
All right.
John, if we hopefully start seeing a trend towards stronger recovery, marching to October and November and December, and we think that traction is going to hold, would we be in a stronger position to strike on this in the first quarter of the new calendar year, or?
No, I think our expectation would be is as the recovery happens, interest rates are going to go up, and so we want to take advantage of that now before the recovery happens. Because there'll be other competing uses for money.
Right. And I mean, we're doing well compared to a lot of municipalities. And when you read the Wall Street Journal, there's concern about municipal debt in many places throughout the country. Uh, Can we escape getting splashed with that?
We have had, during this pandemic, we've had a number of conversations with Moody's, Fitch, and S&P, and because we're a coastal community, they paid particular attention to us. In the case of Moody's, they wanted to put all coastal communities on watch just because of the dependence upon tourism, and that we were the first locality that they called and said, let me hear your story. And so even though we were not in the bond market, Moody's affirmed our AAA position in the middle of a pandemic.
Oh, that's fantastic.
And so, it just like Mr. Chairman had said, just like Ms. Becker had said, we will need to be diligent and continue to watch and continue to monitor and continue to manage. We're certainly not out of the woods by any means. Our economy is going to be tied to the recovery from the pandemic. At this moment in time, this is a good report. And so from a savings perspective, that was our thought process. So let's go ahead and take advantage of savings while we can before it gets away. And we had an issue with the stormwater. In 2018, there was a proposal for refunding, and for a moment, for a couple of months, it made sense. But then there was a change in the tax law, and that reduced the savings, and we didn't do a transaction. The savings have evaporated with the change in tax law, and we couldn't do it. And so that was our thought process. You look at the redemption dates, the call dates on this first issue is March 1st of 2021. But if we do a refunding now and capture it and lock in the savings, we can go ahead and take advantage of that while it's still here.
Well, John, I once again, I think you're to be commended. This is really excellent proactive debt management and taking full advantage of a situation that may not be good for others, but could be good for us. So thank you.
And here's our traditional sources and uses. And basically you can see that on proceeds, there's the two pieces, the $6,000,009 and the $6,270,000 to make $13,000,001. With the we would only execute what would make sense to save. On the lower half, you can see the deposits escrow. We talked about that. How much would we need to be able to call those on the call date? And those are those numbers. And there was the question, well, how much is this going to cost us? And these are built in. These are not hard numbers, but these are our preliminary expectations of all the financial advisor, legal fee, printing, publishing, sale costs as a package deal in there, and our savings numbers are after those. And on to the next two payments with the expectation of, if we're successful in selling, that we would have a new look. And so our 2011, you can see here, at least in July the 29th, the expectation was a 195 coupon, which I think would be tremendous for money that goes out to 2029.
Mm-hmm.
And on the second one is going to be a little bit higher because it's longer. And I don't have it right in front of me, but yeah, the second one would be just a little bit more because the bonds go out further. And so I would stop right there and open it up to any questions or comments.
Questions of the committee or David and Glenn?
My comment is just what I just said. I think we should proceed the way John is leading us here. It makes a lot of sense.
John, there is no change in duration of the debt. The change is in the average weighted cost of funds, and we go from a cost of what to what?
Yeah, that's,
I want to confirm it.
I think this is the best place to show that. And so we look at our average
Enlarge that,
coupon.
you will, John. Enlarge that.
Okay. And so you can look at the average coupon of the bonds before,
Okay.
and the 2011 is 3.51 with a duration of 4.9, so just under 5 years. And we tried to match the duration as closely as we could. To not extend this at all, and we're just trying to make sure that the only focus of the transaction is take advantage of lower interest rates and nothing else. And so we go from a 3.51 and a 3.93 to, and if you want to take a true interest cost.
What's the 3.9 duration is 9.1.
9.1, right. And so we go to a true interest cost of a 195 and a 267, and you can see the duration there at 4.8 and 8.8. So we actually shortened it a little bit because there's the very first principal payments, they're happening now, and so that those wouldn't be that reduces it just a little bit. And so I think that's a more conservative presentation.
I think for our purposes, committee, that's the slide we would want to concentrate on. So if asked, what's the benefit in doing this refinancing, we go from 3.5 to 195 on the first, and we go from 3.9 to 267 on the second. That is remarkable.
Mm-hmm.
And so our proposal is to this is first reading. Our proposal is to have an ordinance that would authorize the town manager to execute those documents and the town bond counsel and financial advisor to do a sale. And so basically would take us to the marketplace in order to sell these so that we can evaluate. And at the day of the sale, depending on what the interest rates are, then the decision is made. If there's savings to lock in, we would do it. If there's savings that are not there or not enough savings, then we would not execute the transaction.
John, do you need a motion from this committee to move this to town council?
I think it would be helpful to say that finance has taken a look at this and would recommend to proceed.
I'd be happy to make a motion that we move forward in the specific direction as advanced by our chief financial officer with a recommendation for consideration to the town council.
There has been a proper motion to move this recommendation to town council. Is there a second?
Second.
Any further discussion? If there is none, all those in favor, please signify by saying aye.
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 Aye. Motion carries unanimously. Thank you, John.
Thank you, Mr. Chairman. That's the end of my report.
Is there any other business to come before the committee?
Move for adjournment.
Move to
Second.
adjourn. Second?
Yes,
All those
second.
in favor, please signify by saying aye.
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 Opposed, the same. We stand adjourned.
Thank you, Mr. Chairman.